Here are the top 5 stocks on my watch list as of May 2020. What's up, guys? In this video, I want to walk you through the top 5 stocks that are on my watch list as of this week. If you have been following the channel, then you may know that I have been doing a dividend investing challenge with Robinhood, as well as a growth investing challenge with WeBull. So throughout the challenge, I've been trying to do a good job of finding stocks that are a good deal to add to each portfolio, especially the growth portfolio, but also with a dividend portfolio as well. So I want to do a breakdown of the stocks that I have on my watch list to see if I will be adding any more of these stocks to my portfolio. Let's get started. What's up, guys? Welcome back. I am your host, Anthony McLemore, and welcome to the Centennial Investor. On this channel, I like to talk about side hustles, investing in real estate, making money online, and obviously stock market investing. So I've been really big into stock market investing lately because I've been at home as well as many other people, and I've been having a lot of time to look at my computer and think about my investment portfolios. Also, I'm pretty young, so I haven't had a lot of experience in real estate, but I still like to give my 2 cents here and there on the real estate environment. But this video, I want to talk about the top 5 stocks that are on my watch list as of this week. So for the last week or two, I've been doing this challenge where I add $100 to a portfolio of either dividend or growth stock investing. And this week I wanted to shake it up a little bit to kind of give my forward thinking process, if you will, of what stocks I plan on adding to the portfolio. So I have a few stocks written down that I want to go through, and to not waste any more time, let's get right into it. Also, I'm going to be using Yahoo Finance to break down the financials of my stocks. If you don't like Yahoo Finance, or if you think there's a better platform for me to use to break down stocks such as TD Ameritrade, Charles Schwab, or anything like that, just feel free to leave a comment down below. I've been really perceptive, really accepting of criticisms on my videos, and all I'm trying to do is make my videos better for you guys to watch and more informative and fun for me to make. So last week it was a funny comment. I actually was pronouncing the word REIT the whole video, and I never knew that it was pronounced wrong. And the cool guy, I'm gonna bring his comment up right now, actually corrected me and said you pronounce it REIT. So thank you for allowing me to not make myself look as stupid in my future videos. So I really appreciate that. So going into the stocks that I want to break down this week, let me simply pull up my Yahoo Finance app and then we can get right into it. So the first stock that's on my watch list is one of my all-time favorite stocks. I mentioned this in one of my previous videos, but I really love this company, and that is AT&T. So basically AT&T is one of those companies that I've personally had a very good experience with. I know many people have different views on certain companies like Coca-Cola and Johnson & Johnson or Tesla, where they are really passionate about the performance of that certain company. And AT&T, I can honestly say that with AT&T, I always had a good experience investing with AT&T. You know, it's obviously as volatile as any of the other stocks in the market, but I'm really drawn to AT&T personally. But I'm trying to be as unbiased as possible, and to give a breakdown on AT&T to see if I would add any more shares to my portfolio, let's take a quick look at its financials. So AT&T is trading right now at $29.79. So on the day, it's up about 3%, so about 90 cents, I would say. I'm looking at it right now. So far, I want to just look at its dividend ratio, because with this dividend portfolio that I have in Robinhood, I kind of want to keep my overall dividend growth ratio about 6 to 7%. I know that's pretty high for a dividend portfolio. It should really be about 4 to 5%, but I want to be a little bit more aggressive because I'm so young and I have a little bit of a greater risk tolerance when it comes to investing in the stock market as of right now. As my portfolio gets larger, I may decrease that tolerance a little bit, but as of right now, I'm all about trying to grow this portfolio as fast as possible. So I really want to have a pretty good dividend ratio at the end of the year. So right now I can see that AT&T pays a dividend of $2.08 or 6.98%. So that's right under 7%, which is pretty much perfect for me wanting to add it to my portfolio. And I think on Yahoo Finance, I can see okay, here it is. So on Yahoo Finance, you can see an analysis price. Now, I would definitely take this analysis price with a grain of salt, because you can't really trust any one statistic as far as investing in the stock market. But the analysis has this price target at about $34, and right now it's at about $30. So I really think I will be considering adding a few more shares of AT&T to my portfolio this week. Right now, I own 2 shares at an average cost of $30.30. So I'm up about 3% on my AT&T position so far. And it's also a really great dividend company. It pretty much pays its dividends consistently. I haven't heard any news about it cutting its dividends so far. So as far as I know, it's going to continue to pay its dividends out in the future. Its earning may be affected because of the pandemic that the world is facing right now. But as of right now, I'm going to keep accumulate as many shares of it as I can. I don't want to become overweight in this one particular company, but I do love it so much that I am going to look to buy more shares in the future. So I know that was a little bit of a longer breakdown, so I'm going to try to make these next 4 a little bit shorter than that. But let's go right into my second stock, which is Ford. I know Ford was one of the first companies to cut its dividends because of the pandemic situation. I almost said the C word, which I know my videos aren't monetized yet, but I want to have the opportunity to monetize in the future if I can. But because of the C word, that Ford cut its dividends, and now it's in a pretty peculiar position because it's not really a dividend company anymore. But from my experience investing in Ford in the past, I've always bought it at around $9 or $10, and right now it's about half that price. The only thing I don't like about Ford, and I'll show you right here, the only thing I don't like about Ford is that on the 5-year chart and on the max chart, it's pretty much been a descending pattern from about 2003, I would say about 2001. What I mean about that is that it hasn't seen like a whole bunch of growth in its share price. Maybe it goes through a lot of stock splits, but I just know that looking from this one chart, I can see that Ford is not a really ascending company as far as the direction the chart is going. If that doesn't make sense, let me know in the comments below. But you see, like, as on the 5-year chart, the company is pretty much, it's just the stock price is continually decreasing. Now, it always consistently pays dividends, which is what I love about Ford. So I think I'm going to take a little bit of a risk on Ford and add a few shares while it's at about $5 to my portfolio. And I'm going to add about 4 or 5 shares this week, depending on how much I have left after investing in my other stocks. And I'll see if I can add 1 or 2 or maybe 5 shares of Ford to my portfolio, because I do feel like it is not going to go bankrupt. If it does, then I'm not a financial expert, so don't take any of my advice and blame me for it. So I'm just giving my opinion on the internet, as many other people do. But I think with Ford, this is a pretty solid price to get in at if you plan on holding it for a good period. But with that being said, let me go into my next stock that I'm watching for this week, and that stock is Occidental Petroleum Corporation. Now, I don't know if I said that O word right, so I think it's Occidental. If I said it wrong, I'm sorry, but that's how I think you pronounce it. And this stock is actually one that I looked up. I didn't know it off the top of my head, so I was just kind of researching some dividend aristocrat companies, some companies that's been raising their dividends for a really long time, and I came across this one company. Now, I know just from the name of it that it is based around the oil and gas energy industry. It is in a pretty peculiar situation as well, with the whole gas energy fight going on or whatever. But when I look at the stock, I can see that it pays a dividend of 44 cents or about 2.93%. And I look at this as a sort of halfway growth, halfway dividend paying company. Now, the dividend is a little bit low for my personal preference. I like to see a dividend around about 4 or 5%. But just looking at the dividend and looking at the overall company itself and kind of looking at the 1 month chart, I can see that it is a pretty stable and low cost stock that could be invested in. Now, I'm going to take a quick look at the analysis report. Now, I know I'm only looking at 3 major factors in this video, but I really do take the time to kind of read through a little bit more of this stuff before I choose to invest in it. Now, as a beginner investor myself, I just want to do my part in informing you that you really should do your own due diligence before investing in any stock and not listening to pretty much anybody else's opinion on the internet. Just make sure that what you're investing in, that you understand what you're doing and that you are at risk of losing money. So now look at this analysis report. It says that the target price is about $14.98 and the current price is about $15.02. It is a little bit around that fair price range. So I don't think it would be a bad idea to add 1 or 2 shares to my portfolio, as I am slowly building this portfolio up. I can add 1 share this week and see how it performs. If I don't like the way it moves, or if I don't like the way it performs my portfolio, I can then choose to either add more or cut losses, or simply just get rid of it myself in that portfolio. So this is basically like the thought process I go through every single week when I'm looking to invest in more stocks. Also, if you made it to this point in the video, I want to remind you that it would help me out a ton if you would just tap that like button really slightly until it turns blue, and that would just mean the world to me and to my channel, because as a small channel, it's kind of hard to get my content out there to more people, and I'm just trying to do my part in helping people understand that as a 21-year-old, it is possible to get started investing in the stock market and making money in the stock market. But with that being said, let's move on to the 4th company that I plan on looking at this week, whether it's buying more shares or just watching it altogether, and that company is Coca-Cola. So I'm going to go to Coca-Cola real quick, and Coca-Cola right now is trading at about $46.11. So I own 1 share of Coca-Cola right now at $47.26. So I am down on that position about 2.43%, but the dividend on Coca-Cola is pretty good. It pays $1.64 annual dividend, which is about 3.56%. It's a little bit less than 4%, but I do like Coca-Cola as a company, as it is consistently paying its dividends to its shareholders every single quarter. So to go on a quick tangent right there, I had a question about whether monthly dividends or quarterly dividends were better. And personally, I don't have a preference because it's the same amount of money anyway. Some people are more attracted to monthly dividends, but I don't really see the purpose in it. When monthly dividends or quarterly dividends, you just have to wait a little bit longer for your money. And if you plan on investing for the long term regardless, then it shouldn't really make much of a difference whether the company is paying monthly or quarterly dividends. So I'm going to go to the details. I'm going to look at the price target for Coca-Cola. I haven't actually looked at this yet, but I see the price target is about $52 and it's about $46. That's about $6 under the price target right now. So I definitely am considering adding some Coca-Cola to my portfolio this week. I think my top two as of right now is probably Coca-Cola and AT&T as far as which ones I might buy this week. I also consider this. Let me know what you guys think about this. So what if I started adding some high dividend, low fee ETFs to my portfolio as far as SPHD? That's one ETF that I actually looked at a really good bit this week. I was considering whether just to spend all $100 of this week on this ETF SPHD. And the only thing that deterred me from buying this ETF this week was the high expense ratio. Now it has an expense ratio of about 0.3% as far as the expense ratio. Now that may not sound like a lot, but the ETF that I invest in my Charles Schwab account, SWPPX, has an expense ratio of 0.02%. So 0.3% is almost 15 times higher the expense ratio. And I just think that's a little bit too much for me personally to add it to my portfolio because the expense ratio is just a little too high for me to be comfortable with. I know that was a little bit of a tangent, but let me go into my last stock of the video with what I am looking at for this portfolio this week, and that is Regions Financial. Now I have a really good relationship with Regions Financial as far as the stock. I know there's a lot of banking companies that you can choose to invest in, but as I live in Alabama, I live in the South, I really like Regions as a company. I like its values and I like pretty much everything about the company. So I'm going to be looking to invest in Regions Financial. I know it took a hard hit when the pandemic happened, but let's take a quick analysis of the company. So right now it's trading at $10.32 per share. I don't own any shares in my Robinhood portfolio, but I do own a few shares in my WeBull portfolio of Regions Financial. And right now it pays a dividend of 62 cents per year, or about 6%, 6.01% percentage a year. And going into the details, the price target is about $11.79 per share, and it's about $10.32 per share. So I really like Regions as a company, as I said, and I will be adding some shares definitely to my portfolio. I just don't know when, whether it's this week, whether it's the week after, but I do like Regions enough to where I want to have a stake in the company at some point in this portfolio. So those are the top 5 stocks that I'm looking at this week. Is AT&T, Ford, Occidental Petroleum, Coca-Cola, and Regions Financial. So if you have any questions or you have any suggestions of your own of any stocks you're looking at, leave a comment down below and I'll be sure to look at it, because I always like reading the comments and replying to every single one. But one last thing that I want to mention before ending this video is the free stock that I got from WeBull from someone signing up through my affiliate link. So I can't tell exactly who signed up, but if I go to WeBull and I go to my settings tab, I can look at my free stock, and I pretty much, this is the first time I had somebody use this affiliate link, so I didn't know how it worked. So I really wanted to capture this on camera, but I opened it by accident and I was able to see it. So you guys got to see the aftermath of it. But you can see that I have one free stock. If you sign up and deposit $100 to your account, you will get 2 free stocks. So hopefully this person will deposit $100, so I'll be able to get another free stock, and they'll get another free stock as well. This is just not me receiving the stock, but they're also receiving the stock as well. So I got my free stock for this sign up was Snap, and it was about $18.23. If you were ever interested in signing up for WeBull and looking for the referral program, you can see that you do actually get stocks, and they sometimes can be a little bit of higher value. I know the price can be as low as $2.50, or it can be as high as $1,400 at times. So there's my one free stock. If I get another free stock, or if I get anyone else to sign up through this link, I'll be sure to include it in the video and say thank you. So I don't know who's used this link this time, but thank you if it was you, and I appreciate it. So that's all I have for you today, guys. It really means a lot to me if you hit that like button, if you enjoyed this video, and if you really enjoy my kind of content, then hit that subscribe button, as I will be uploading a video every Monday, Wednesday, and Friday regarding my investment portfolios. As I said, leaving some engagement, any kind of engagement on my video would really help me in the YouTube algorithm and allow my content to reach a little bit more people. So I hope you enjoyed this video, and until Wednesday, guys, peace.